companies that are taking into account ESG factors tend to be better quality companies. And also, it's becoming much more mainstream in terms of companies are considering these factors as part of their running of their companies from a day-to-day perspective.
Welcome to The Greener Way. I'm your host, Rose Mary Petrass, Senior Journalist at FS Sustainability. We are recording on Gadigal land. We pay our respects to traditional custodians of country and elders past, present and emerging. Today, we're revealing the top stocks in ethical, sustainable and responsible investing with Erica Hall, Director of Strategy and Distribution at Ethical Investors. Welcome to the show, Erica. Congrats on your book release.
Thank you so much for having me. Yeah, it's pretty exciting to be a published author. I would never have thought it would happen.
I've got Erica's book right here. It's called the Top Stocks Special Edition, Ethical, Sustainable, Responsible, a Sharebuyer's Guide to ESG for Leading Australian Companies. Erica, what is the importance of these kind of investments and of incorporating sustainability into the advice process?
I just think it makes really good commercial sense. If you're thinking about investing, what are you trying to achieve? You're trying to improve your capital. And so one of the magic wonders of the world is compounding interest, where you actually keep on improving your returns over a period of time. And so in the quest of, achieving great returns, we spend a lot of time analysing markets and stocks and trying to get an edge. And so information is the core of that. Mm-hmm. And ESG information gives you another range of factors to consider. And what you find is that companies that are taking into account ESG factors tend to be better quality companies. And also, it's becoming much more mainstream in terms of companies are considering these factors as part of their running of their companies from a day-to-day perspective. And I think also to avoid it or to not consider it means that you run the risk of, being a dinosaur and becoming extinct. So just with, the backdrop of what we're experiencing, even in Australia but beyond, is this whole transition to a low carbon economy. And, this is the biggest transition since the Industrial Revolution. Mm-hmm. It's the electrification of everything. And so you want to be investing in companies that are taking this into account and looking at ways to be part of that transition. Mm-hmm. And so that, ESG factors can help you identify those companies and make sure you're on the right side of the transition.
When you are undertaking the research for this book, can you walk us through, the methodology and what determines a good ESG stock?
Yeah. So what I started with is the ASX 300 based on market capitalisation, and they tend to be the larger, more liquid stocks. And that's deliberate because those larger stocks have more resources to be able to take into account these ESG factors and start to incorporate them into their policies mm-hmm. and processes. Unfortunately, the information isn't as readily available for the smaller mid-cap stocks. So that was the starting point. Mm-hmm. And then what I did is I looked at it per sector. So there's 11 different sectors in the ASX. And I did it by sector and best of breed in sector because otherwise there would have been certain sectors that wouldn't have made the grade. Energy is the obvious one. They just don't stack up compared to other sectors. And so they did have the lowest ESG rating, highest ESG risks, which isn't surprising. But I thought it was important to get a full view of the whole landscape. Mm-hmm. And so that's why I did it best of breed per sector. And so, but the data is obviously lagged and it's backward looking and it doesn't really incorporate intentionality. Mm-hmm. So the data that I used was the Morningstar Sustainalytics data. Mm-hmm. I'm quite familiar with the data. I looked at it from an environmental, social and governance perspective, but I also looked at the management of those risks as well. What were companies doing to manage those risks? Were those risks improving? Were they actually managing those risks well or were they deteriorating? And then I did a whole separate piece on greenhouse gas emissions and carbon and the transition to the low carbon economy, given it is a mega theme. And after looking at all of those metrics and all the data, which is contained within the book, there's quite a lot of rich data and data tables that people can have a look at and really enjoy. I really enjoyed it. But then also I looked at the company's reporting. So what are they doing from an annual reporting perspective? Their sustainability reports, how seriously are they taking ESG? And so I really then put all that together to sort of capture the best in class. Now, interestingly, when it comes to having the lowest ESG risks, there's only, at the time when I wrote the book, there were only 10 listed companies that had the lowest ESG risk available. But interestingly, when you're talking about low carbon risk, there were 68 companies that had low carbon risk. So actually, there's a lot better scorecard for companies considering carbon than there are for general ESG risks.
Interesting. Okay. We will reveal the top ESG stocks in just a moment. But first, I wanted to talk about sectors. As you said, there is a range of sectors profiled in this book, and some of them are quite unexpected. So what are the best and worst performing sectors?
Yeah, look, I was really surprised as well. So look, in a way, worst energy, you wouldn't be surprised with that. Although, that being said, really impressive in terms of the work that they are undertaking to transition to this net zero economy. And they have to, because if they don't, they are going to be in this stranded asset situation. They are going to have an impact on their share price. They may not be able to be in business in the future. So the amount of innovation that was occurring in the energy sector was somewhat encouraging. I did kind of fall in love with the stock. Maybe I won't reveal it yet. Just because they were doing so much in terms of transitioning from fossil fuel generation into renewables. And so that was really encouraging. The surprising one for me that was disappointing was tech. So, and look, it is a sector that does quite well on ESG metrics. And so I think it's a case of, because you're pretty good already, you don't really need to do so much. And so I felt that they were really lagging behind all other sectors. Most of the tech companies were not seriously taking into account their greenhouse gas emissions. When you're talking about greenhouse gas emissions, there are 3 scopes. Scope 1 is your own operations. Scope 2 is essentially the powering of your own operations. So they're sort of direct emissions. And then Scope 3 are indirect emissions.
So with tech companies, you're talking about data centers, right? Does that fall under Scope 2 emissions?
Yeah, I'm talking beyond data centers. It's so there's a whole range of different companies that were within the tech sector, but there were some that are data centers, like Next DC is one of the data centers in there. Yeah, and they're just not taking into account Scope 3, which is that indirect. And so it could be the use of the tech product. It could be the distribution of the tech product as well. So I was just a little disappointed by the lack of commitment to reducing greenhouse gas emissions generally, and particularly it was missing in Scope 3. So, that was very much out of step with most other sectors.
That's very interesting, yeah.
Yeah. And I didn't expect it, because it is one that does tend to be overweighted in the sustainable investment realm, because it does do quite well just organically by the nature of the businesses that they're in. But yeah, I think it is important that every company plays its part and every company contributes to reducing all 3 scopes. Look, the industrials was really interesting. They did very well. They rated quite highly. There were quite a few I could have chosen as a top stock within that sector. So toll rolls did particularly well, and I didn't expect to see that either. But they have some great policies in place. They're looking at wildlife corridors. They're using recyclable materials. They're embracing EVs. Like, they're really looking at every aspect of their business and looking to make reductions.
Interesting.
So they did exceptionally well. the REIT sector did really, really well, and that surprised me. But then when you look at it, they've been involved in the NABERS, which is the National Australian Built Environmental Rating System, that's been in place for quite some time. And so I think this demonstrates what gets measured, gets managed. And so as a result, their ESG risks were, exceptionally low, and it was the standout sector. And certainly, what I understand is that those highly sustainable buildings, they tend to attract better prices. They tend to attract better tenants. They've obviously got lower costs. They're better insulated. They're recycling their water. They've got solar panels on the roof, so their operating costs are quite low. And so they're highly sought after buildings. So
interesting.
So it's really, so that was a great sort of, finding through the research of the book.
So it's time to reveal the top ESG stocks in Australia. What are they? And importantly, do they get good returns?
So there's 10 of them. I've picked out 10 per sector. So I did actually integrate the real estate and utilities into one, because there were only 2 utilities that made the top stocks in the book. But the best for the energy sector was Origin, and I really liked Origin because they have made a commitment to become net zero across all 3 scopes by 2050 in alignment with the Paris Agreement. And it's demonstrated, a genuine commitment in actually improving its renewable energy generation capacity, and it does have exposure to wind and solar and hydrogen renewable energy sources. And it's also looking to decommission its Erin coal power plant earlier than projected, possibly as soon as 2025. So this is kind of an odd one because it has one of the higher carbon emissions, and it, in terms of its ESG risk, it actually did increase a little bit because of the demand in the summer months last year.
Right.
It actually ended up producing more electricity from its coal plant, but it is making a genuine commitment to transitioning to renewables. And so I think it's one to watch. So whilst it may not be obvious choice, I think in terms of intentionality and its journey and its pathway, it's a really good stock. In terms of financial services, so that obviously incorporates banks and insurance companies, QBE was the standout for me. It's a general and reinsurance company, and it actually, obtains its revenue from insurance premiums from property and causality insurance. And because of that, it is at the forefront of ESG risk because it needs to consider when it's underwriting, its insurance, climate change and the risk associated with it. So all these floods and fires, and changing climate has a direct impact on, the insurance premiums. And as we know, some regions are becoming uninsurable, or they've had incredibly large hikes in their insurance premiums because of the risk. So they're committed its insurance and reinsurance underwriting portfolios to net greenhouse gas emissions by 2050 within its own operations. So I'd like to see that extend more broadly, but it's a pretty good start, and certainly they are definitely at the forefront of ESG, hitting their bottom line and being a financial risk. The next sector is healthcare, and there's a lot of great things going on in the healthcare sector, but my pick was Sonic Healthcare. It's a globally recognised healthcare provider that operates in the area of pathology, radiology, laboratories, medicine, general practice medicine, etc. So it's pretty diverse, and it did very nicely during the pandemic with all the testing that was required. But it aims to be net zero across all scopes, including Scope 3 by 2050, and it has a credible pathway to achieving that. It's also securing 80% of its energy from renewable sources by 2030, and it's well on its way. So for me, it was a standout in the healthcare sector. So as you know, there are many more sectors, 11 in total, so you can read more about them in the book.
Thank you so much, Erica. Where can people find your book?
It's available in Dimex, in WH Field, in Collins, and also online through Booktopia and Amazon.
Wonderful. Until next time, I'm Rose Mary Petrass, and thank you for listening.
The Greener Way podcast is a product of FS Sustainability, a show about people, the planet, and investing in our collective future. All information in this podcast is for education and entertainment purposes only. The Greener Way podcast gives listeners access to information and educational content provided by discussing numerous financial sustainable options and our featured guests. It is not intended as a substitute for professional, legal, or tax advice. The hosts of The Greener Way are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.